Joining me now for a closer look at the day's markets action is Brendan Capstick from Nedbank Private Wealth. Brendan, thanks so much for your time this evening. Let's take a look. Let's start off rather with looking at how markets have been performing, particularly local markets. We see, a slight recovery coming through, and I guess we can point that to the higher gold price. But I want to look at yesterday's close and how much that was on the back of the delayed budget and how much attributed to some of those trade jitters coming through.
Yeah, thanks for having me. Good afternoon to everybody. 100%. I think initially when we saw the budget postponed until the 12th of March, sentiment was negative regarding this. I think as the news developed into the afternoon, positive sentiment returned to the rand and the fixed income markets. Bond yields went out a lot marginally. But I think what you just mentioned as well is that there's been renewed confidence in the GNU as everybody around the table gets consulted when this proposed VAT discussion comes up.
And sticking with conversations around the budget and the GNU, it seems like, the GNU parties hit a deadlock on tax hikes, particularly that increase in VAT from 15% to 17%. I was looking at the retailers, and those stocks have been bleeding, especially the clothing retailers. I think at one point yesterday, Mr. Price was down around 4%. I looked at it this morning, still down around 1.8%. Pepco's down, TFG's down, as well as Truworths. Are the jitters around, the impact of a possible VAT hike just weighing on those retailers, considering that a VAT hike would impact consumers' purchasing power?
No, 100%. I think it would affect consumable or disposable income in the market. You've got to consider these retailers have had an unbelievable run over the last 12 months. So they've pulled back from those higher levels. But I think we still have a lot of tailwinds in the local equity market and in the retailer space. I mean, just to highlight the two-pot system, as we are aware, there's a lot of liquidity coming into the market, as well as low interest rates and it's energy stability with no load shedding. So I think from that point of view, trading environment still robust in the retail space. I think we see a lot of value in the local market still. But to your point, I think the VAT impact and the possibility, if that even comes through, increase that possibility, it still needs to be determined.
So it's just some short-term pain on that front. Let's move over to some company news. We've been talking about Anglo all week, to be quite honest. There's been updates on their streamlining efforts, results out from Anglo, results out from Kumba as well. Now we have results out from the parent company. And listen, it just seems like diamonds are just not a girl's best friend anymore. That diamond market really under pressure, and that's showing through De Beers, and that also just weighing on the overall operations. What have you made of those numbers, Brendan?
No, 100%. I mean, if you could produce it in a lab for next to nothing, I suppose that is a bit of a drag. You're 100% right. Management team has been very busy. Demerger of Amplats. They sold their nickel business as well now for $500 million, as well as just the beers headwind. I think they're trying to right-size their portfolio. We also saw that announcement with the Chilean miner, Codelco, that agreement, that possible synergies between that Chilean state-owned mine that can unlock nearly $5 billion worth of synergies between those assets. So that's a positive, I think, the market's looking through. Share price is up nearly 3%. But to your point, I think they're right-sizing. The Amplats issues, hopefully it gets resolved by June. But I think as a result, the earnings weren't great, as you just highlighted as well. They're quite soft. I think the market's looking through this, and capital management from the management team cutting the dividend also indicates the prudency of that management team.
The miners that have been doing quite well are the gold miners, and Gold Fields out with numbers today, posting double-digit earnings growth on the back of an improved bullion price, but as well as an improved operational performance in the second half of the year. Your thoughts on those numbers?
Yeah, I mean, I think as you mentioned, the market resources up nearly 4.8 or 5% this afternoon, and I think that's driving our market higher. Respectively, Anglo American, Anglo Gold and Gold Fields are up nearly 8%. EPS on Gold Fields up nearly 41%. I think the big thing that you look at these two gold shares is two aspects: the free cash flow aspect of these shares strong dividend policies. We saw Anglo Gold Ashanti revising the progressive dividend policy, indicating that they're going to be paying more than 50% of the free cash flow. Gold price still at all-time highs at $2,950 per fine ounce. So, yeah, they're in a sweet spot. I think the market was a little bit spooked on the CapEx announcements, specifically from Anglo Gold Ashanti yesterday. But Goldfields, the results, another strong one coming through just this morning.
All right, let's move over to Mondi. They've been hit by soft demand as well as a challenging pricing market. Is Mondi one of those counters that really relies on economic growth? I'm just thinking about what's happening in Europe, which is a market it operates in, and the growth there, which is quite tepid. Do they just need to see some really strong growth coming through for it to post better results?
Yeah, spot on. They've had their own problems to deal with. Right sizing and impairments has been a theme for that business. Generally, would be a defensive business, but I think the consumer environment in Europe has been tough and it's been a headwind, as you've mentioned. But the pulp input cost and price mix has been a headwind in the Mondi stable. I think that's been an issue for them, and that's why the earnings and the EBITDA was down 5%, I think, for this reporting period. So they're indicating a better second half, but I think there's a lot of the costs that they can't control at this point.
Let's move over to Adcock Ingram, also reporting downbeat numbers, revenue under pressure, earnings falling as well. Walk us through some of the factors that just weighed on Adcock.
Yeah, I think Adcock is really a SA story. I think it's a consumer story. I think also the pricing aspects of where they play it could be a headwind because it is a regulated space. We saw this with Aspen also. How poor that share price has performed. So I think that space, the pricing power has been difficult. Again, not a great set of results on the Adcock side. We don't follow it closely, but I did have a look at it. It doesn't look too strong at this point.
You talk about that pricing power and how their consumers under pressure, and I just think of that 17% rate, that hike that the government was considering, and just the kind of pain we'll see coming through to the consumer if that actually happens. Lastly, before we get into stock picks, Blue Label out with results. Don't know how much you look at that one or follow it. So growth, earnings growth was quite modest, but what I found interesting was that they upped their stake in Cell C. This, of course, as they await the Competition Commission to approve its plan to take over voting control of Cell C. What have you made of that move in particular?
Yeah, similar, not too close to it, but I did go through it briefly. I think a little bit small for us in our space, but I think on that front, I think they did miss on EBITDA quite a bit. I think the profits were up around 22%. But I think in the whole telco space, again, I'm just repeating myself, but I think the pricing is where the issue comes in. Similar to MTN and Vodacom, that the pricing below is an issue, and data and lines are trading like utilities, and I think that's difficult to price at this point. So we look for better opportunities at this point.
All right. Before we get to your stock pick, Brendan, let's reflect on some counters that have found favor with your industry peers.
I've gone back to Nvidia.
Nvidia?
Yeah.
Why?
You know why, Bright? Because I've been watching the stock very carefully, and it's always been, there's been huge selling positions in it. And I think the sellers are gone and the buyers are returning. We're getting the results shortly. I'm a bit nervous about that because, the expectations are high.
Yes.
But suddenly over the last couple of days or weeks, they've been gaining momentum, even at a time when the markets are down. The buyers are returning. So I take that as a good sign. I think the sellers are out. The weak holders have left. And we're going to get new momentum in the stock, depending on what the results produce.
I know David doesn't like the commodities at the moment, but my stock pick is going to be Anglo Gold. They also released results today, which were slightly behind market expectations. So you saw it kind of fall off a bit. And the guidance on the cost is a bit higher than what people expected. But I think there's still a few positive catalysts there. The dividend policy has been changed. It's more generous now in terms of dividend policy. I think they're in a nice cash flow position now. You see that the free cash flow reaching $1 billion, almost $1 billion. So and the balance sheet is ungeared. And they still have not been included into some of the US indices post-listing last year. So this is their fourth quarter of producing positive profits now in the US after being listed. So we expect that they will be listed in some of the US indices, and that should create some passive demand for Anglo Gold. So hopefully it does provide some support for the share price.
So Anglo Gold and Nvidia. Let's touch on Anglo Gold first. We did talk about it when we talked about Goldfields. I'm looking at the share price now, and it's up 7.6%. How much of this is just on the back of the higher gold price, and how much of this is on the back of yesterday's good results?
Yeah, it's a bit of both. I think yesterday it was down, actually, after CapEx, and I think now with Goldfields coming out again and the whole sector, such strong free cash flow yield that you're seeing, ranging from 14 to 7% on both these counters. So again, Anglo Gold Ashanti with that progressive dividend or new dividend policy, I think I'm not surprised to see it higher. And of course, the gold price. I mean, it's moving towards a $3,000 finance level. So again, I think these gold shares are in a bit of a sweet spot at this point from a free cash flow yield point of view.
And what's your sentiments around Nvidia? A lot of people say it's very expensive at the moment.
Yeah, Nvidia, I think everybody knows the company and loves the company, but, trees don't grow to the sky. And I think from our perspective here at Nedbank Private Wealth, we have a long-term, well-considered view and more value-orientated. So, Nvidia is trading at a 30 times forward multiple. Yes, these big tech companies require the chips for the big language models and the AI, but I think you've got to be aware of valuation. So I think there's other tech plays, and we've seen the broadening in the US market. US markets are up 5% on a year-to-date basis, but the Hang Seng in the Chinese market is up nearly 14% year-to-date. So I think from our perspective, a little bit expensive, but I think there's other opportunities in the semiconductor space that you can look at.
All right, so you're not picking Nvidia, you're not sticking in the gold space. What is your stock pick?
Yeah, my stock pick today is British American Tobacco, BTI. So we like it because it generates a lot of free cash flow, very strong free cash flow conversion, trading at a PE of around 8 times and a dividend yield of 8. So I think, versus the industry medium of the tobacco industry, which is around 12 times PE, I think it's scanning cheaply. Some of the important aspects of the company to look forward to is that they're buying back £900 million worth of shares this year, as well as the menthol ban that was removed from Donald Trump's administration in late January. Newport is one of the biggest brands on BTI's side, and that's a positive for that group. And of course, their new generation products, which is the smokeless world that they're trying to move towards in 2035, gaining traction. And that is definitely high margin business for them. And of course, contributing nearly 17.5% of revenue, these new generation products at a margin around 7%. So, yeah, I think there's optionality, there's free cash flow, and of course, these new products are quite exciting for the group.
So BTI one that's on your radar. Brendan, thanks so much for joining us today. That was Brendan Capstick from Nedbank Private Wealth.